Hello everyone and welcome to the 23rd episode of Your Money, Your Taxes. I'm Lalit Abichandani and owner of ABIC CPA Associates. First of all, Happy New Year to everyone. We just started a new year, so happy and a prosperous new year to everyone. Our episode today is about investment planning and Paresh ji will be educating us about this topic. Paresh Shah is a CEO of Paresh Shah Financial Services. He's a certified financial planner and has been practicing for the last 17-18 years. He helps individuals and businesses co-create innovative financial strategies. He's a licensed CPA presenter, educating CPAs as they guide their clients on investments, life, disability, long-term care. He specializes in pension and profit sharing plans and also estate planning and business succession planning. Paresh ji graduated as a chemical engineer from prestigious IIT Kharagpur. He is a 2016 honoree of Long Island Business News Leaders and Diversity Awards. Paresh ji resides in town in Jericho in Long Island, New York with his wife Shamal, and their son Shamik is a sophomore in Stony Brook University, New York. Paresh ji, welcome to the show.
Thank you, Lalit ji. Thank you for this great introduction. Really appreciate it.
So Paresh ji, investments in stock markets are very hotly discussed topic, especially given the fact that lately the stock market has just skyrocketed in last 3 or 4 weeks since the ending the election. Everyone seems to be looking for next Apple or Google or these big companies. However, I have seen a lot of people lost lots of amount of capital and they have made mistakes. What do you feel about the investment in these financial institutions?
So, first of all, I'd like to wish all our viewers a very, very happy and prosperous new year. Our best wishes from here to all of you all for the upcoming year. Now, Lalit ji, this is a very interesting area, stocks and stock market investment. I'll start with a very important comment or very important thing that I'd like to convey to everybody. Investments in stocks should be worked on as investments and cannot be worked on with a casino mindset. So, having said that, let me explain a little more about it. So, stocks and stock market basically came into play when smaller investors or people who do not have their own businesses wanted to participate in the growth of larger businesses, and in turn these businesses wanted the savings of these smaller investors as capital. So the structure was formed of having stocks, and then these stocks got listed. So yes, the stocks are a very important and a good component of any investment strategy, and we as financial planners would love to include stock or stock-based strategies as part of anybody's investment plan. But having said that, a lot of people change that strategy from doing an investment plan to doing speculation. I mean, what they are looking for is with very little research, just with listening some things on the rumor mill or some TV shows or something, they pick investments, they put their hard-earned money behind it. Sometimes there is a little bit of success sometimes and that makes them put in more money, but eventually I have seen that a lot of such people who are doing it in this way without devoting adequate time end up losing a lot of money. So yes, stocks are a good method to invest, but you have to get away from this mindset that it's a casino and that you're just going to put money for gambling,
Yeah, you're right, Paresh ji. It's very enticing when people see that the stock market goes up 200 points, 300 points in a given day. People are enticed into that and they put their hard-earned money into there only to find out that they lose it in next 2-3 months or so. So tell us, what should an average person without the knowledge of stock market should do? Should they completely then keep away? I mean, how do they participate?
Okay, that's a great question, because completely staying away from the stock market to any average investor would actually mean losing out on the opportunity that the the stocks offer as an investment vehicle for growth. In the long term, we do find that stocks and stock-based investment do considerably well if you follow a specific strategy. So one methodology for people who want to invest in stocks, maybe that they can look at, say for example, researching specific stocks. Now there's a lot of material available online on companies and on sectors that they're interested in. They can then identify which sectors they think may do better. So as we go into the new year, as you know, Lalitji, a new administration is coming in. So based on the appointees in the new administration, you can kind of try to research and find out which industries may probably do well, may not do well, and based on that, then you have a list of industries. Then you go into the specific stocks in those industry and try to see which has a solid base and therefore try to invest in those stocks. Now that normally takes considerable time, and there are investors out there who do that regularly, monitoring those stocks, monitoring the performance and monitoring the industries and then coming up with their investment. But the average investor normally is scrambling for time. So he may not have the time to devote to this investor. Now, Lalitji, you may have heard of the S&P 500, right?
Yeah.
So the S&P 500 is a stock-based index. As essentially what it means is that you take the top 500 companies in the US in terms of market capitalization, and you see their overall growth over a period of time. You mark a date on which you put it at a specific value, and then from that point, whatever growth takes place in those 500 companies, that is represented in the index. So you see, it's a very diverse portfolio, or it's a very diverse mix, and that permits a person to be spread across various investments. Not only that, what happens is that as let's say some company is doing very well and their market capitalization goes up, then those companies will come into the top 500, while companies which are not doing well will go out of the 500. So effectively you get, your losers will kind of tend to go away and your winners will come back. So in that way, it is possible. There are investment houses which offer what are called index funds, and you can invest in the index funds and therefore participate in the market. So this may be a couple of ways in which you can look at investments in the stock market.
How about mutual funds, Paresh? They have the other alternate where they can invest in mutual funds. What do you think about that?
Right. So, when we talked about the index funds, we were talking about a very passive activity. That means that the 500 stocks are not selected by any individual. They are automatically picked up because they are the highest 500 capitalized companies in the US, and therefore they become part of the index fund. But then mutual funds came into being when there were people who specialized in researching stocks and picking stocks, and therefore a pool of investors would give them their money. Those people would charge a fee, and in turn they would invest the money for them. So mutual funds have an element added on top of index funds, in the sense that now you have somebody who's not just blindly taking all the 500, but he's picking from that what he feels are going to be the best performing funds going forward. There's one other advantage. So there are two more advantages of doing mutual funds. One is that because there's a large pool of money invested, therefore there's diversification. That means the mutual funds can invest in a number of different stocks. Second, now the offerings of mutual funds themselves have diversification. That means I can pick a mutual fund which invests in, say, the US, or which invests in European markets, or which may invest just in China, or it may invest in some sector like technology or healthcare, or any such particular sector. So if I have done my research at the top level as to where I want my stock investments to be, then in turn I can utilize the mutual fund for that investment. So mutual funds are a very popular form to do stock investments, Lalitji.
But it is just as complicated as the stocks are. So instead of picking stocks, now you have so many choices within mutual funds. So with so many choices, how do investors decide which direction they must go?
Lalit, again, it boils down to spending time to research. And only in this case, you're spending less time in research. So, as I told you earlier, research had two layers, right? First, you investigated which sectors you want to be in, and then you would investigate what stocks you want to pick up. In this case, you would only investigate what sectors or what areas you want to invest in, and then there's a basket of mutual funds which would do that sector, and you would just have to evaluate those and pick them. That is one way to do it. An alternate method to do it would be you to employ the services of a financial planner or advisor who can guide you across this entire sea of investments to be able to pick the right kind of investments that are suitable to you.
So it's not a getting quick rich formula. You still have to do a lot of research, and you have to navigate the clients through the complex landscape of stocks, mutual funds, and index funds, and etc. So give us a little bit more information about this as to how an individual investor can go into these things.
Right. When we work as financial planners, when we work with individuals, what we first want to do is establish the plan. That means that what is the goal for which you're doing your savings? Is it for college education for the children? Is it for retirement? Is it for purchasing your home? And a goal is taken, and then that goal is translated into a dollar amount. That means on a particular date or at a particular time, you will need that many dollars in order to fulfill that goal. The second step comes is then investing for that particular goal. So either you're going to do one single lump sum investment towards attaining that target dollar amount, or you're going to break it up into some kind of annual investment that you do. Once we establish that, then based on the time, the dollar amount, and the person's own risk tolerance, that means his own ability to stomach the risk, that means to stomach the fluctuations or the volatility in the investment. Based on that, we will select what investments to pick. Maybe we can pick, in some cases, portfolios of specific stocks. In some cases, we pick portfolios of mutual funds or even index funds for that matter. One area, Lalitji, which we have not talked about much, which is also a very important component which we financial planners want to always include as part of the overall planning strategy, is fixed income investment. Those are also a critical part versus stocks, you know.
So these are the people who don't want to take too much risk, but they want fixed income in a given period of time. So explain to us what is fixed income securities or fixed income investments.
Okay, Lalitji, I'll explain it in short. Basically, fixed income means that I'll get the simplest example of a fixed income product is going to be a CD, a bank CD. That means you give the money to the particular person, and then they in turn give you interest, and after a certain period of time they give you the money back. Now there are 4 or 5 different such things. If you loan the money to US government, it's a treasury. If you loan it to the New York State or such local bodies, it becomes a municipal bond. If you loan it to businesses, it becomes corporates. So there are quite a few such fixed income strategies out there. Based on the return desired and the risk the person is willing to take, you can select which fixed income strategy you want to follow.
So Paresh, this is really a very complex area, and I have a lot of other questions in there as well, relating to both stocks, mutual funds, as well as fixed income securities. We are running short of time this time, so let's set aside another episode especially for these questions. And meanwhile, if viewers have any more questions, they can send them to Paresh ji as well. For right now, thank you very much for coming in.
Thank you, Lalit ji.
And we will pick it up again in the next episode about this mutual funds and stocks.
Thank you.
Thank you, viewers. And again, Happy New Year.
Thank you very much, Lalit ji. Thank you, viewers, and a Happy New Year to everybody.